confidence and humility. Both are important. And this isn't just a planning issue, it's more of a life lesson issue.
Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Confidence and humility, both are important. And this isn't just a planning issue, it's more of a life lesson issue. We really have to go through the world with an appropriate balance of confidence and humility. Doesn't really matter what the topic is. We need to understand that, yes, we are good at this. We are capable. We need to have this confidence. We also need to stay humble at the same time and not get too full of ourselves. In a planning context, and especially a retirement planning context, it's important that we know what we know. We have to be humble enough to say, I don't really know the answer to this. Maybe I can learn it. Maybe I don't really need to learn it if I can lean on somebody else that does. But it's also important to know what we do know and be confident in that, but also know that we can't possibly know everything with total certainty. And it's that balance that is difficult, but important to have. We'll see this all the time in planning where people will they'll just talk about things with absolute certainty. And you'll especially see this if you watch a lot of TV or you listen to some podcasts or you read some books. People tend to speak with a lot of certainty about things because they're probably very smart people and they've experienced things through their lens in the past and they've seen things operate a certain way. So a lot of times if you're watching TV or you're listening to podcasts or you're reading books, they tend to speak with a certainty. Maybe they'll throw in some humility and some maybes in there as well. But a lot of times when you hear people talking about things, they'll say, no, this is what's going to happen. Not everybody. I know that's painting with a broad brush, but a lot of times it's kind of spoken with certainty and it gets absorbed that way as well. For example, let's talk about income tax rates. A lot of people, myself included, think that we're probably going to wind up with higher taxes in the future just because income isn't covering expenses right now in government spending. Now, even though I think that, I also have to operate with some humility and say, well, there's no certainty there. We could wind up with an entirely different system 20 years from now. I mean, there was a time when we didn't really have income tax at all. And maybe somehow, some way, society changes, AI changes stuff. Who knows? It could be something completely different. So we can have a view where we say, hey, we want to be doing Roth conversions, for example, because we think that likely in the future, tax rates will be higher than they are now. We can't be saying, well, you must do conversions now because there's no chance that we could ever have tax rates that be the same. It's absolutely going to be higher. We can't operate with that. We have to have some humility and say, hey, we think what we think, and we're going to make some decisions based on that. But we're not going to go crazy over it and demand that certain things be done a certain way, because we have to stay a little bit humble and say, hey, the situations could change, and it's largely stuff out of our control. We'll see this a lot with investments as well, where people will say, well, we think that inflation's going to run hot, or we think inflation's going to die down, and therefore you should do this or that. And it's just spoken with absolute certainty. And that just isn't a good way to operate. This is why we are huge fans of not only diversification, but also we talk all the time about having at least 5 years worth of income set aside outside the market. Now, I know that those of you who listen to this all the time are probably tired of me talking about it, but it's the case. We want to have those 5 years, your next 5 years of income set outside the market in something like bonds, CDs that are going to mature and going to provide you that income no matter what happens. You're going to get that cash, not 100% guaranteed, but pretty darn close. We want high quality bonds. We want CDs that are backed by the FDIC, all these things that where there's never 100%, but it's pretty darn close to 100% that you are getting your money back and you're going to have your income no matter what happens in the stock market or anything else crazy going on out there. So we need to set up this proper structure. But then even within the investments, diversification is absolutely key. We talked about this several episodes ago about position sizing and why it matters. And it absolutely does. Because even I can have the absolute best idea. I can look through a company's earnings and listen to their earnings call and understand what their business is and say, man, the market's missing out on this one investment. And maybe I can give it a little bigger weighting than usual, but I can't put 50 of an account in there and just say, yeah, we need to go for it. Maybe that works when you're younger. Great. But we're talking about retirement planning here. If you're 20 years old and you want to put half your money in something that's going to be the next greatest thing, go for it. You got decades to make it up if you lose that money. And it might work out to be indeed the greatest investment ever. When you're young, you can do that. When you are retired, that's not going to work out too well. So we need to have confidence in saying, yes, these investments are what we want to do and what we want to focus on. But we still have to have proper position sizes and diversification across many different areas. We can't lean too heavily one way or another because we have to have that humility that says, maybe it turns out differently than what I think. That's what position sizing does. That's what diversification does. It allows you to still win and be successful without having to absolutely be right on everything and without taking on too much risk. So no matter what it is, I know we talked a lot about investments. We talked about a little bit about taxes. No matter what it is, we need to operate with confidence, but also layer in the humility. And by humility, I'll also call it some risk management and diversification. We need to be able to have this set up to where we can win no matter what. That's the goal. The goal is not to be right and be a genius and pat myself on the back and prove everybody else wrong. Don't play that game. We're talking about retirement planning. We want to make sure that we don't run out of money. We want to have good health. We don't need to be the genius that predicts everything perfectly. We can have confidence in what we know well, but also still operate with humility. So we're going to keep 5 years, at least 5 years of your next 5 years of income out of the stock market. We don't need to be messing with that. Keep it there so you have that income no matter what happens. And then within the investments, we can go for more growth, but also do it with humility, diversification, risk management. Let's make sure that we have different avenues with which to win. So that way, no matter what the scenario winds up being long-term, retirement can be successful and a lot less stressful.